Hey guys, welcome back to another video. Today I'm going to share with you 5 tips that will help you become a better trader, keep you updated on my journey that is the year of 2021 trading, and of course share with you some of the best trading opportunities that are on my radar, so doing some technical analysis on the charts. If you guys are brand new, thank you for joining me. If you haven't done so already, make sure you subscribe. If you like this video, hit that like button, and of course if you have any questions or comments, leave it below. I do read each and every one of them. I will make sure to respond. Now, I want to start off by talking a little bit about, I guess, the different tiers of trading. And I've done this plenty of times on podcasts, plenty of times on these videos, but I know we're getting new people each and every week, not only to the Tier 1 trading platform, but to here is YouTube as well. But Mark Douglas typically tiers traders into one of 3 categories. There are the failing traders at the bottom, there are the boom and busters in the middle, and there are the successful traders at the top. So think about 10% of traders become successful. There's about maybe 40% in the middle of there that are boom or busters. That mean they're okay. They're not good enough for trading to make any significant change in their life, but they're not bad enough to blow their account. And then there's the failures at the bottom. So let's just take the failures out of the equation, right? The boom and busters are the category which I typically focus on because the traders that we get over at Tier 1 are struggling traders, either new traders that are looking to learn or traders that have been doing it for a while and they're trying to get over that last obstacle. And many people think that, you know, in order to become a better trader, you have to become a better chartist. You have to be better at technical analysis. And don't get me wrong, you do. The better you become at technical analysis, the better you will be at trading. It affects so many parts of it. But let's not downplay the psychological side of things as well, right? It's all good to have a trading strategy, a trading technique that has a positive expectancy, meaning it has an edge in the market, and if you extract that edge, you will make profit. But the key word in there is if, right? And many traders have a good system or a good strategy, but they step on their own feet. They self-sabotage and they can't consistently execute it. And that's why they're okay for stretches and then they're bad for stretches and they end up in that boom or buster category. And the reality of trading is that the best traders are the best at survival. And here's what I mean, right? The journey of a trader that we go on is very similar to a roller coaster, right? It doesn't just go straight. That'd be a pretty boring roller coaster, right? It goes up and down and up and down and up and down and ebbs and flows, just like a healthy trend in the market, right? As a trader, you're going to go through hot streaks, you're going to go through drawdowns, you're going to go through busy times, you're going to go through times where there's nothing in the market. And the top traders, those are the ones that best navigate those drawdowns, best navigate those unbusy times. And I'll give you an example, right? I told you guys last week I got off to a hot start. I basically replicated what I did last week. Last week I took 5 trades, won 4. This week I took 5 trades, won 4. So I'm hitting at 80% right now, right? Historically, I'm a 55% trader, right? So I am way above what I should be. So in the back of my mind, I know that a drawdown is coming. I'm going to revert to the mean at one point, meaning that I'm going to hit a rough patch. So that's okay, right? I've accepted it. It's not a bad thing. I'm not giving myself negative speak. It's just the reality of the numbers, right? I know my numbers. I know my probabilities. I know my win percentage, right? I can mentally prepare to handle that. So when I get situations like that, the key is don't F it up, right? Don't take my losses, take my drawdown, and survive until the next hot streak comes. And that's how professional traders stay successful. They keep their head above water when things aren't going great. Struggling traders, they struggle when that drawdown comes and all of a sudden I come in next week and I'm like, hey guys, I lost 6 out of the last 10 trades, right? That's when they start either forcing trades, they start trying to get revenge trades in the market, or they bail on their strategy off of a very short sample size and go to something else as soon as that original strategy starts to work again. So it really is a key of survival, and that goes the same for kind of the slower periods in the market as well. And many traders believe that you have to be involved in the market at all times. We spoke last week about frequency and how that's a double-edged sword, and the need for frequency isn't necessarily a good thing. That need to be involved, well, if you want it bad enough, you're going to be involved. And if you're involved when the trading opportunities aren't ripe, right, you're going to have a sour face, sour look on your face. I tried to put that cleverly together. This is what happens when you don't rehearse things. But you guys get the point. So Survival of a trader is key, and that's trading psychology. And this week I did a challenge, I did a 5-day challenge. It had nothing to do with trading, but I'm going to bring it here and make it trading related. But outside of trading, I do a lot of coaching, a lot of mental coaching and whatnot, that working on self and personal development. And I wanted to bring up a positivity challenge. I forgot what magazine I found it in, but I thought it was really good. I've worked on positivity a lot in my life. It's one of the reasons that I've become a successful trader, believe it or not, changing that mindset. And I shared it across all social media platforms. Now, I'm going to share it with you very briefly here in this video and make it trading related. But if you want to see the whole thing, just check it out on social media. Instagram is probably your best bet. That one's less flooded than like my Twitter feed, so it's easier to find things. But go over to Instagram, Akil Stokes RTM. Make sure it's not any of the fake people. So if I DM you or ask you for money, it's not me. Don't get scammed and all that fun stuff. But check out the 5-day post. I think it's going to be amazing for your life. But let's talk about it as it relates to trading. So day one. Day one, the theme was practice positive perfectionism. And this is basically accepting that mistakes will happen and knowing that you can correct them. And when you relate this to trading, it essentially means this, right? Understand you're going to make mistakes, right? We're all perfect, no, we're not. None of us are perfect, excuse me. Our goal is to take good trades, but we're also human. That's what I meant to say. We're all human, right? So we're going to make mistakes. Sometimes we're going to enter a stop loss wrong. We're going to hit the buy button instead of the sell button. We're going to enter too early. We're going to enter too late, right? These are mistakes that happen. These are mistakes that kill traders in the long run. And what I mean by the long run is that if you make a mistake once, it doesn't hurt you, right? It happens. Professional traders make mistakes too. We just limit them. When it starts to hurt your trading is when you're consistently making those mistakes. And that's what I caught in my trading those years back when I decided to make a change. But don't overbeat yourself up for mistakes. It's not the end of the world. Look at all of them as learning opportunities. So if you make a mistake, identify what the mistake was, try to identify why you made that mistake, and then go about implementing some action steps that you can do to fix it. It's very important as a trader, and that's a way to turn your negatives into a positive and keep moving forward in the right direction. Day number 2 was research something amazing. And what this is basically that our brain is naturally programmed to think negatively, right? This is the whole caveman stuff. Everything is a danger. Our senses and our alert system is always up. So we're always paying more attention to the negative than the positives, right? That's not a good thing. If you think about financial markets in general or money in general, there are a lot of negative connotations, a lot of negative myths out there about money in general. And it's very easy to feed into them. There's a good chance, and you can let me know in the comment section below, that when you first started telling your friends and your family that you were getting into the financial markets, trading, investing, what have you, they probably gave you a nasty look. Either it's gambling, or it's you can't make money, it's a fraud, it's a scam, or they just associated you with like dirty, nasty Wall Street people that are out there taking houses from people and whatnot. It's important that we get rid of those myths and or those ideas, that way of thinking, and we actually understand what we're doing in the market, right? Trading, speculation, investing, whatever you're doing, it is a way to make your money work for you. It is actually what everyone should be doing with their money, right? We should be putting it in a position to deliver us wealth, meaning that we work to make our money, and then we make our money work for us, and then that money produces time, because the more money that asset produces without us putting in the time investment, the more time we have to do the things that we love, or do something else, whatever it may be. But we're not usually taught that. So I would invest some time in doing research, whether it's podcasts, it's reading books, watching YouTube videos, good stuff of course, to actually educate yourself on what money is, how money works, and how it is a beneficial tool instead of a negative one. Day number 3 was visualize your desired outcome. And many great athletes, you guys know I coach athletics, many great athletes visualize all the time, and they sit back, they close their eyes, they walk through what their ideal scenario is going to be. And this is important in trading as well, right? We should be trading with a rules-based trading plan, meaning that we should have very strict rules for what we need to happen in the market. The process, first and foremost, the process to identifying the market, what we need to happen or what we need to see in that market to take the trade, how we're going to take the trade, right? For you guys that are, I guess it doesn't matter what time frame you're trading, but especially on the higher time frames, right? When you can identify these setups, right? You guys in the live room, you see it. We identify setups weeks in advance, right? Take the time to walk through it. Don't just look at it and be like, oh, that's cool, maybe it'll happen next week, and put it to the side somewhere. Actually walk through it. Walk through that if-then process in your mind. Okay, if price action comes down to this level of support, then I need that RSI to go oversold. If that RSI goes oversold, then I need a strong bullish candle. If I get that strong bullish candle, then I need a higher high, higher close on the next bar. If I get that higher high, higher close on the next bar, then I enter at market. My stops go here, my targets go there, right? Visualize and replay that scenario over and over in your head, because what's going to happen is two things. One, when it occurs in the market, when it comes time to enter that trade, you're not going to hesitate because you know exactly what to do. You've rehearsed it over and over and over again in your head, right? Just like a performing artist rehearsing lines of a play or a script, right? But you're also going to become more confident, right? Because you've ran through that scenario, you've crossed the T's and dotted the I's a million times. You've double checked to make sure stops are in the right places, targets are in the right places. You've got so much more confidence in that trade that when all of those emotions stem up, like fear, right? Not just FOMO, fear of missing out, the desire to enter early before you get that signal, or fear of actually entering the trade. I don't know what the acronym for that is, but fear of entering the trade, where you're scared because it's a live trade and money's at. Either way, you'll have a lot more confidence in what you're doing. I hope that worked out. The camera, actually, the battery died and shut off, so I hope I can edit it so it looked good, but there's like a weird glitch or pause. My bad. Should have charged the battery up first, but visualization is key to success, trust me. The next one, day 4, was cultivate spontaneity, right? Be spontaneous. And this was basically getting rid of the mindset that things are unchangeable. I know I preach control, we can control all the time, and that is true, but we can control a lot more than we think. But many of us are, we work under the mindset that things can't be changed. Like, again, you can't make money in the market. I didn't go to an Ivy League school, so I can't be a trader. We need to be spontaneous. Basically, we need to take action before we think. Even the bigger picture of, we always talk about that comfort zone, that comfort bubble, right? And 90% of people are in the comfort zone where they live a comfortable life, a just enough life, and then 10% of people venture outside that comfort zone where it's dark and scary, you don't know what to expect, but those are where the best things in life happen, right? It takes really a leap of faith to do that, and that's kind of being spontaneous. And I look back into the two biggest moments in my trading career, because I never planned on being a trader. I got into investing because it was the stock market was the next step in kind of how I was developing my financial literacy. And I remember when I got a passion for trading, I started falling in love with it, and I started taking it a little bit more seriously and played around for ideas of actually doing it. I remember I called my dad up. And said, hey, I'm thinking about doing this thing. Everyone tells me it's a bad idea, but you're my pops. I trust you. What do you think? And I was expecting him to be like everyone else. Oh, don't do it. Go get your 9 to 5 and whatever like that and blah, blah, blah. And he was like, what do you have to lose? And I was like, well, you're right. I wasn't at rock bottom, but I wasn't, if you can imagine the cliff that I was standing on career-wise and life-wise. I was, 21, right out of college. I had 3 jobs I was working, but they were all like odd jobs. They weren't like careers, so it wasn't anything that I built up any time or moved up in any positions. So if you could imagine, I was on a very small ladder, and if I were to jump off that ladder, the ground was right there. It wouldn't hurt that much. And he said, what do you have to lose? And I didn't have much to lose, and I said, okay, well, whatever, let's do it, let's try for it. I was spontaneous. I took a leap of faith, and it worked out. Even within there, after struggling for a good amount of time, I remember I filled out a survey, a trader assessment on a website, gave him my number and all this fun stuff, and later that night I got a call. And I never answer numbers I don't know. To this day, I never answer numbers I don't know, but for some reason I'm looking at the phone, and I just had that feeling, and I said, Akil, just say yes, just do it. Right? And I did it, and it was it ended up being my mentor, Jason Stapleton, who talked to me and kind of beat me down a lot in my approach, humbled me, and even when it came, he didn't try to sell me a training course, but once I learned more about his program, I said, you know, it was a significant investment. I'm very frugal. I don't like spending money, but you know, I just said yes. I said, you know what, Akil, let's do it. You keep saying no to everything and you're not really progressing in life. Let's just go for it and we'll figure it out. And being spontaneous, the ability to say, yes, I can, and let's try it, betting on myself essentially is what put me in the position where I'm at today. So make the habit of saying yes and just going for it. You know, be smart about it, of course, but going for it and trying something, not just basing your opinion off of what others are saying around you. Finally, the last one, day 5, was program your mind for happiness. This talked more about the brain and how our brain, again, is triggered to value the negative more than the positive. This is, again, caveman stuff, danger, all that fun stuff. But when we have traumatic memories, they're actually, or traumatic experiences, those memories are actually seared into our brain, right? That's a protection process. They're put into our brain so our brain remembers what happened and it reminds us not to do it again, right? You think of touching a hot stove, right? The first time you touch a hot stove, ooh, it burns, right? I don't know about you. Every time I go near a hot stove or a stove top in general, I kind of tap it. Even if I know it's off, I tap it just to make sure it's off, right? That's it's a memory stuck in your brain reminding you of that dangerous moment. So that doesn't necessarily happen with our positive moments. It's more of the negative. So our mind is filled with a lot of negative crap. So we have to be deliberate about putting positives in there. And this is important trading because let me ask you guys this: what do you remember more, your losses or your wins? Probably your losses, right? I know traders where whenever they win, they can go on like a 10 trade win streak and it's like, yeah, you know, that was supposed to happen. And then the next day they lose like 2 trades and I get, I lost 2 trades, it's the end of the world, right? And they're panicking. I'm like, well, what about those 10 winners? No, it doesn't matter. That was supposed to happen. These 2 losers, right? So we're valuing those mistakes and it's important that we don't do it. I mean, knowing your numbers helps, right? You know that 10 wins, 2 losses, you know, that's good, that's right in line with, or probably better than what your system should be producing, so that's a positive. But going back to why many traders quit and fail is because they put so much value on the negative aspects of trading that they overlook the positives, which in many cases outweigh the negatives. So instead of just focusing on your negative trades, you know, going back and reviewing your losses, go back and review your wins. Take a look at what you did right. Take a look at your best trade. I just spoke to a trader today who showed me a trade on the pound yen where he said it took him on a roller coaster ride. He entered, it went up, almost stopped him out, went down, break even, went up and down, and finally rolled down and hit targets. I'm like, those trades suck, right? Heart's beating, you're pulling your hair out. You know, notice I don't have any hair anymore, too many of those type of trades. But those are ultimately gonna be the best type of trades for you because those are the ones that you need to remember. Force yourself to remember them because those are gonna benefit you. And next time you have that situation where things kind of get, you know, antsy, where you wanna make a mistake, you're gonna remember, hey, I stuck with my rules, I trusted my system, I trusted my plan, I trusted myself, and it paid out the way that I wanted it to. And that's a good memory, and we need to keep more of those in our heads. So probably longer than I expected, but this is important stuff, trading psychology, and I hope at some level that was helpful for you. I would challenge you to kind of write those things down and put them into practice, if not into your regular routine. At least, you know, do it for a week. And also, again, go back over to Instagram, take a look at the real posts, the ones that relate also to life. I go into much more detail about some of the stuff and not just trading as well, because as you know, life and trading kind of go hand in hand. So let's head over to the charts. Let's talk some technical analysis. By now, I've scared everyone that's just looking for a quick signal away, which means we're focused on the traders that I want to work with, the ones that actually care about their trading future and the stuff that matters. So. All right, so let's hop into the charts, and I actually had a lot on my radar going into the weekend. I'm not going to share it all with you because this video is already pretty long as it is right now. I don't want to take up too much of your time, but I want to pick out a few opportunities that I think will be good to look at and a few that will be educational, of course. We're going to start here on the dollar Swiss on the daily, and Dollar Swiss is a pair that we've been looking at really all week in a live room for a few reasons. The bigger picture is that we're looking at a potential head and shoulders. You can see that formation forming down here, and the head and shoulders is a kind of a multi-legged reversal pattern. So instead of a normal kind of V reversal that you see down here at the bottom, we have a shallow retracement. We then have a shallow extension, followed by a rather deep retracement. That's what's going to form that neckline right here. And then we get a move back down, and then we see, I guess, confirmation of the head and shoulders would be a break of that neckline, so that horizontal resistance line that I drew up. So bigger picture is, if we do get this head and shoulders, if we do violate that neckline, my expectation is that we can travel back up into about really 90 cent even, a little bit below that, 89, 80s, but really our previous level of structure support right here. You see my mouse kind of circling it. If you can't see it, I'll go ahead and draw a little rectangle right there. So that's bigger picture, and maybe even a little bit below that level. If we actually take a look at some Fibonacci and put it on there, we can drag a Fibonacci retracement from our swing high to our swing low. It's going to put a 50% retracement a little bit below that level. So if you want to play a little bit safe, maybe instead of 90 cent even, look at about 89.75 down there. So that's the bigger picture buying opportunity if we can violate the neckline of this potential head and shoulders. Now, if we go down to the lower time frames, here's what's interesting. We actually have an advanced pattern formation in progress. And you can see, just kind of looking back, talking about the head and shoulders, you can see what has happened here, right? We've consolidated on the right or on the left. We've come down and we've started consolidating on the right. And this is what a lot of these markets have been doing to start the year, is consolidation. And I told you guys I've taken, 20 trades already this year, which is, 10 trades, 10 trades already this year. Each and every single one of them have been a pattern trade, and mainly it's because of the type of movement that we've been seeing. And I'll show you kind of a clearer picture. We actually just came off a pattern formation here on Dollar Swiss as well. I'll give you guys a second to see if you can spot it out. Any takers? Boop, 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 boop. Right, we have a bat pattern right here. X to A to B, had B to C, and a CD completion up there that rolled over rather nicely. And you can see we're doing the exact same thing right here. This one has already completed. Let me just draw the Fibonacci so you can see where that level's at. We had an X to A to B, B to C, and a CD completion right up here at about 89.09. Now this pattern is valid unless we violate that X leg. So if this is available, if you're someone that's looking to get short at a hold of previous structure resistance, you're looking to get short on the open next week, this is going to be a valid opportunity for you. Now, here's the thing, right? So we just talked about a head and shoulders pattern, which would be a buying opportunity. We just talked about an advanced pattern, which would be a selling opportunity. My guess is that many of you, especially if you're new, you're asking, well, Akil, you just looked at two different things in two different directions. And I would say this, as a newer trader, it's very important to decide what type of trader you want to be, right? My advice is always stick with one strategy, and master that strategy first before moving on. And that can even be a strategy can be a specific strategy like pattern formations and one specific advanced pattern. It could be a directional type of movement. It could be like, hey, I'm only a trend continuation trader. I'm only a counter trend trader. It's a lot easier to master one thing and then add on later than to try and do too much at once. But this is also where rules, not just rules in how you trade, but rules in how you analyze and identify the market come into play. Because if you have solid rules, you should never be in a situation where you have contradicting signals. If you do, you need to double check your rules. And a good example of this is, well, if that X leg is violated, that's close to the neckline. So if the neckline gets violated, the X leg is going to be violated, right? That invalidates the advanced pattern formation. So boom, you're out of that trade, or you're not taking it if you're waiting for kind of a more conservative reason. At the same time, if you're waiting for the head and shoulders, you need that X leg, you need that neckline to be violated in order to confirm that head and shoulder. So you can see that there's no way you're going to be in two trades at the same time. If one signal gets triggered, the other one is either stopped out or invalid, and then vice versa. And so that's why we put so much of an emphasis on rules-based trading. It's going to keep you out of trouble. It's going to keep you from making emotional decisions based off of probably what was the outcome of your last trade. All right, so following up on head and shoulders, the Dixie, the dollar index here is another one that had a head and shoulders on the radar as well. And you can see this one is still in progress. Now, this one's going to get a little bit iffy depending on how you like to trade it, right? If you are a trader that uses kind of slanted trend line type of support and resistance lines, you're going to have something that looks like this, right? Left shoulder to your right shoulder, and you're going to get a violation right now, assuming that we close here. If you're someone that's using horizontal support and resistance, so kind of just horizontal lines left and right, you need a higher point, right, 91 even, to be broken, to be violated, excuse me, in order to get that confirmation. I am personally a fan of using horizontal support and resistance, so I am not seeing this as a violation yet. One's not right, one's not wrong. It's personal preference. You just want to be consistent in which you use. Now, what's interesting here is if we go down to a lower time frame, a 4 hour, right, we have another advanced pattern formation forming, and this is one that I don't often speak about because I love it. I just don't trade it. I love it. I love the psychology behind it. I love the philosophy behind it. I just don't trade it because from a technical perspective, it doesn't make sense to me. But what we're looking at here is a potential bearish butterfly pattern, and there's many ways to trade the butterfly. We're not going to get into that here. That's one of the reasons that I don't like trading it, because there's literally a very wide zone that you can use as a completion point. So if you are going to dig into the butterfly, you got to dial down and consistently trade it the way that you want to trade it. But let's say we're using this 127 inversion as our D completion point. You can see that it completes above X, and that's the problem. With your other pattern formations such as Gartley's and Bats, you're inside the X leg, so you have your own kind of structure protection. With this one, you don't often have protection. You're kind of in the middle of no man's land. But in this specific scenario, if we look left, right, you can see that red line is there from the top of that head and shoulders. We actually do have an area of previous structure resistance. So this would be an opportunity where you can place a trade here at the 127. You can hide stops above that spike high, right, per your rules, of course. Depending on how you use targets, you should be able to really get a good risk reward here. I'm a fan of telling people at least test out a retest of the X leg. You're going to have a much higher win percentage if you do that. Obviously, your reward is going to be a little bit lower. Or if you're just taking a 3D2 Fibonacci retracement from the A leg to the D leg, you can see that's going to stretch you out even more and give you an even better risk reward. Regardless, you're going to have a pretty decent risk reward here on this potential butterfly, this potential bearish butterfly here on the Dixie, but also keep an eye out for that head and shoulders as well. So continuing with our theme of patterns, we're going to head over to the NASDAQ. And this is, obviously you can see the notes on the screen. This is something we've talked about in past videos, trend continuations, breakouts, all that fun stuff. This is going to be another advanced pattern formation, but this is going to go hand in hand with also a trend continuation trade. And I'll show you what I mean. So obviously, the market is continuing higher, right? So we are in trend continuation mode. We're not in counter trend mode. If you look back on your charts, there's nothing there, absolute black space, blah, 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 right? So what we've been looking for over the past really, few months, half a year, honestly, is pullbacks, 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 pullbacks. We were looking for pullbacks. We went into a little bit of consolidation. We broke out of it. We went right back to looking for pullbacks and chances to involve ourselves in the bullish direction. And you can see that's what we're getting right here. I'm going to delete this and just kind of draw out the ebbs and flows of what's been happening, right? Your foundation course 1.0 type stuff, right? You can see ebbs. Yeah, ebbs would be higher, I guess. Flows, I never really thought about which is which. But you can see higher highs, retracement, new extensions highs, retracement, new extension highs, right? And now we're putting in, right, what's called, or what could be called, a complex pullback if we can travel down here. Now, this is a normal pullback trade. Not all pullbacks come in a single leg. They sometimes come in multiple moves. What's more important than what moves they come in is, what levels you're choosing to either confirm the trend or violate the trend. And right now, nothing beyond, or I would need to see a move beyond these lows right here to violate this bullish bias that I have on this pair. Now, as we go down to our lower time frame, you can see those squiggly wigglies that I drew in that complex pullback. It's actually going to turn into something else. And once again, we have an advanced pattern formation here. If we take this move right here, right, the double bottom, the right-hand side of the double bottom, X to A, swing low to swing high, A to B, B to C, And if price action travels down to this area, I'm not going to be exact because I didn't draw my fibs out, we're going to have a potential bullish bat pattern. And this is an example of how you can use pattern formations in two ways. We always get the question, if I'm going to be a pattern trader, do I need to do higher time frame analysis? And the answer is no. You don't need to, because you don't really have an overall directional bias when it comes to patterns. There's something that you can trade straightforward by themselves. If it's valid, it doesn't matter the direction. Most of the time they come in consolidation. Just trade it, right? They're counter trend type of moves because you're typically looking for just a little bit short area of relief off of them. However, this is where it can come in handy to understand how to read a price chart, right? It all comes down to understanding how to read a price chart, because now you may be able to get more out of this move. And I've done this a million times in my trading career, is where I use the advanced pattern as an entry reason into the bigger trade. So I want to get involved in a bullish trade here. I'm very strict on what I need in order to involve myself in trades. So this kind of gives me a very aggressive excuse, because advanced pattern formations are the only thing that I can trade aggressive. When I say aggressive, I put a limit order on the decompletion and I let it roll, right? Everything else, I need to wait for very specific signals to get involved. So this can be one where obviously you can trade it as an advanced pattern formation. You can simply use it as an entry reason into as a way to get involved in the overall trend. Or you can do kind of the best of both worlds, right? You can, if you trade multiple positions, you can take, profits off, partial profits off at a completion point, or at a normal target point for the advanced pattern, and then leave a partial position on to catch that bigger trend continuation move as well. So very decent opportunity here on the NAS. And I think I got one more for you. I think we're going to see something very similar over on the DAX as well. Yeah, similar situation, so we won't spend too much time talking about it, but same situation here. You can see the only difference is, or no, we did clear these highs. This actually got moved up. We cleared these highs. We're coming back into a previous level of structure support right here. And we go down to a lower time frame. You can see the exact same situation. This one's not as sexy, right? Exact same situation setting up. This one's actually, I'll give you guys two, because an area that stood out for me as well is right here. This is a very nice support level. Yep, where's my thing here? This is a very nice support level right here, and you'll see there may be another opportunity there as well. So let's look at both of these. One would be the bat pattern. Again, we'll go through this quickly because it's basically a mirror image of what we just saw on the NAS. X to A to B, B to C. C to D is going to be right down here. We didn't quite touch it. It looks like, and actually I may be wrong, we may not have a cipher. It looked like a cipher just off of eye test, but I think we're going to be short. This ends up being our A. Ooh, just short. Okay, it's not going to be a cipher. I was going to say, if this thing ends up getting violated, there will be another advanced pattern formation out here in the secondary support zone. But we're not going to get a valid mark on that, so just disregard it. But that's what's on the radar for this week. Again, usually my plan was to come in here and just give you guys a couple each week. But all four of these, however many we looked at, were juicy, and I thought they offered some pretty decent educational opportunities about how to trade, what I look for, and kind of the mindset going in. All right, thank you guys for joining me. As always, before you leave, hit that like button. That's a big way to support the show. Leave me a comment if you have any comments or questions, something you liked, something you didn't like. It doesn't matter. I'll read through it. Just make sure it's constructive. That way I can do something with it. Just don't be like, Akil, you suck. And of course, subscribe. That way you don't miss my next video, whether it's this trading diary or whether it's the Trading Coach podcast that comes out 3 times a week, wherever you listen to your podcast at. All right, I'm going to show you guys some of the, what is it called, when I mess up, the blooper reel, and leave you with some cool music. All right, until next time, plan your trade your plan. Take care. Hey guys, in today's video, I'm going to give you guys, hey guys, welcome back. In today's video, I'm going to give you 5 tips to help with becoming, hey guys, welcome back. In today's video, I'm going to give you guys 5 tips. I got kind of bored just coming in and giving a chart, so I want to make it more like a diary, kind of get back to what I used to do. Hey buddy. Hi. Another break-in during a live recording. Say hi, dude. Yeah, that's you on TV. Okay. Alright. See you, buddy. I'll see you later, okay? They can't see you down there.